The market was green, but were all the technical ducks in a row? In today's daily market waves, we slide through the surface action and go deep into what the candles and momentum really say. From volatility to crypto, we track the ripples before they turn to waves. Let's dive in. And as usual, we start with the volatility index. So today's candles were clearly bearish. However, I would like to say that considering a slightly bigger frame, this is not fully bearish. Now we need to see a closure below this green candle low in order to consider a strong bearish move. Somewhat similar on the futures. If we look at the 2-day frame, we are seeing that this candle, the current candle, wasn't able to break below the low of the previous doji, and technically it is considered bearish neutral right now, with a better chances to move lower. However, we need to see a confirmation. And similarly for the futures, that's an interesting point here. So this is the 5-day frame. We have a strong bearish candle, and potentially this would be forming, the last 3 candles would be forming a falling 3 method setup. So we need to see a closure of tomorrow's candle. If it is green, then the odds would be slightly bearish. Well, that's the perspective for volatility. So volatility is looking for further moves down. However, they need to be confirmed. Now let's have a look at the dollar. So dollar is clearly falling, and we have the daily closure today, and well, so far it's completing the bearish continuation candle with a very good chances to move lower, and I think that we would be looking for a new lower low very soon. Speaking about the 2-day frame, it's not complete, the candle is not complete, and we are expecting it to close bearish for now. Let's see what happens tomorrow. On the weekly frame, it was on Friday it was a bearish continuation candle so far, and the chances for a move lower are significant. However, I'd like to mention that multiple frames, including hourly, daily, some indicators are strongly diverging, and there is a very good proximity of the bottom right now. So speaking about the charts, this is Elliott chart, Elliott wave chart that we've been tracking for quite a long time, and no changes here. So this highlighted area is the most typical area that I would expect based on multiple Fibonacci ratios and also some technical perspectives. So once it hits the bottom here, we might see a strong rally upward. And speaking about the short-term frame, this is potentially an ending diagonal, expanding ending diagonal that is forming right now for wave 5. And if it closes like this, somewhere here in this target area, a strong move up, confirmation, then we might see a very strong flight towards the origin of the ending diagonal, approximately 102. So that's dollar. Now let's talk about bonds and TLT. So the candles today are, oh, that's a very interesting closure in 8 minutes. So far it is sitting right on the neck, and it has a chance to form either strong bullish candle or rather neutral one. So let's see. I think that it is going to be very bullish at this moment. Speaking about the 2-day frame, it's also on the fence, sitting on the fence right now, right on this yellow line, which is a strong resistance support depending on where it closes. So far, I think we will return to this one in just 7-8 minutes, just to see how it closes. So speaking about the larger different maturities, 2, 5, 10, 20, and 30 years, so they're approximately in the same situation right now. So generally, I would say that the candles are trying to form a bullish reversal here, but the power is not sufficient yet. So the only that were kind of moderately bullish are 30 and 20 years. So 10 year is still undecided. Speaking about the potential waves. So this we discussed this over the weekend and last week that this could be potentially wave 2 of a much bigger impulse. So the first impulsive wave was here in April, and after that we are looking for a big consolidation. So however, this wave also could be impulsive under certain conditions, and we might be looking for this type of wave as well. So as long as it stays above the beginning of wave 1 here. So that's another possibility. So far, let's see how the candles are closing in 5-7 minutes. Speaking about TLT, TLT formed, technically it's a bearish candle, might be strong reversal, and this could be opposing doji on the way down. So no confirmation yet, but the odds are bearish right now, and the trends remain bearish. So technically this is what we were expecting after a strong bearish monthly closure. Speaking about the wave, there is a possibility of forming bigger wave C or 2. However, a direct move towards forming wave 3 here is also a typical path. I think that this formation in general is bearish. One way or the other, we would be looking for a lower lows. So that's the perspective for the bond market. Now let's move on to our commodities, and we will start today with gold. So gold had a very strong bullish candle today, no question about it. So it looks like we are going higher, and this is a strong bullish engulfing. We have a break above multiple resistance, now support lines, and also we have a momentum. So this is a 2-day frame. It closed today. As of Friday, it was bearish, but right now it flipped clearly bullish, and there is a good chance that we see a continuation upward. Speaking about the 3-day frame, it is still not decided, and tomorrow it's a closure of the 3-day frame, and ideally we would need to see a closure above this line, above this high of this red candle. So that's the perspective for gold and for the candles. Now let's speak about Elliott waves. This is the chart that we've been tracking for a while, since the middle of May, and the biggest concern about this wave is that it has overlap between waves 1 and 4, potential 1 and 4, and now I would be looking for a completion of an ending diagonal. This would be the ideal target, and 3662 would be the ideal price for the end of this formation. Let's see what happens next. So far, this is on track. And speaking about the GOD Gold Trust, so the candle is bullish, and we have a very strong bullish momentum here. And speaking about the weekly, we remember the weekly discussion about this bearish harami here. So the weekly needs to close above the green line in order to continue higher. So this week could be very crucial indeed. So especially if we have a behavior like the candle goes up and then it pulls down below the green and closes on Friday below the green line, that would be a strong, potentially strong reversal signal. So the next 4 days would be crucial indeed. Now let's talk about the GDX, the miners ETF. What we are seeing here is a bit concerning. I would say that GDX is again trading above the Bollinger Bands on the daily frame, and this is usually brings a lot of trouble down the road. But so far it's not that bad. We need to see at least a reversal move and a confirmation for this particular one. Now, speaking about the 2-day frame, tomorrow will be a closure of the 2-day, and we will monitor what kind of momentum we will get. Speaking about the Elliott waves, this is the chart that we discussed way back in May. We were saying that good chances to form an ABC formation and a good move higher. So GDX formed this type of formation, and I am considering this as a bullish flag. This is an ideal target for the flag between 54 and 61 with the midpoint of 58. So far, GDX moved about 6.5% since our call, and I am expecting it to move a little higher here. So that's for GDX. Now let's talk about natural gas. So natural gas is normally behaving normally, full of surprises. So after a fairly strong bearish closure on Friday and the weekly and multiple other frames, so against the odds, it moves right now upward. And if this candle was slightly bigger, I would say it's a reversal. However, I would like to see a confirmation in the next couple of days. So this is a good start, inside up, but a confirmation is needed. So far, the odds are fairly bullish. And for the 2-day frame, which also closed today, technically it's a bullish harami, but it requires a confirmation. I would like to wait for 2 days to see the momentum on the daily and the 2-day frames. And speaking about the charts, this is what we've been tracking. There is a potential for a larger wave 2, alternative 2. As I said here, natural gas would need to break below this red line. However, there is a possibility of forming an impulse. This would be the very first wave of wave 1 of 3. Now we have wave 2 and potentially starting wave 3, which would be aligned with our mid and long-term perspectives. By the way, we discussed our long-term perspective in the weekly reports for multiple commodities, and if you would like to stay updated, we have weekly digests for commodities, for strategy, and for stock market for virtually a cup of coffee on YouTube. Well, now let's move on to oil. Oil also formed a very interesting candle today. So now we have, after a strong bearish closure of the months, we have a strong bullish move on the very first day. Well, there is a daily is bullish at this moment. However, it got rejection at the 50 days moving average. Speaking about the 2-day and bigger frames, they are not decided yet, and I am really cautious about bigger momentum, because generally, as I mentioned multiple times, we need to see a strong weekly confirmation of a reversal, a strong weekly bottom. So far, there is a chance. Let's see if oil maintains the momentum. Technically, it would need to close above this red line in order to form a bottom. It might be even stronger. Now let's talk about Elliott wave. So this is a big question right now. So the recent waves were so impulsive or motive in both directions. So I'm right now thinking about the possible zigzag formation. So first of all, this wave moves here, and this could be either this wave A, B, C, or I would say even this one would much better. So this could be an ABC formation for wave 2, but it also could be an impulsive way of the bottom. So this would be wave, an impulse of the bottom. Let me change the color here so it matches. And this could be a zigzag formation, an A, B, C here, because every wave of this structure is either as an impulse or a diagonal, which is a very interesting observation. So, and the wave 2, by the way, retraced exactly 50% of the wave 1 here. So if this is the case, then we would be looking for a wave upward, and so far this has been impulse. We could see wave 2, wave 3, 4, and 5. So by the way, this is the potential structure that we discussed in our weekly digest, and if you remember that it was a bigger picture, was this green wave on the middle, on the midterm chart. Well, so far it is aligned. Let's see how it closes. If oil makes a bottom, a strong bottom, and if it closes above the line that I discussed here in the candles, this one I would be considering a potential rally, an impulsive rally. And speaking about the oil companies, I'm not convinced that this is a bottom, because candles are red, and Chevron, Exxon, and Conoco, they all need stronger moves. So the only one which could be potentially bullish here is Conoco, because of its move above the 8 days moving average. However, the candle itself and its position is not convincing. We need to see a stronger follow-up. So far, I would say that the oil companies are sitting neutral, slightly bearish. And now let's move on to uranium. For uranium, we will discuss only candles today. We discussed a lot about charts and the potential moves for URA, for Quad U, and for CCJ over the weekend. So far, the daily closure today had a chance, by the way, to form a bullish candle. However, it decided to resolve with this harami. Now the chances are neutral, slightly bearish. Speaking about the 2-day frame, which will be closing tomorrow, it is right under influence of this strong bearish engulfing. The chances for a move lower are significant. Now let's talk about Quad U, energy fuels. So far the daily is moving down. It lost its 8 days EMA. No questions here, so everything as expected. And for 2-day, we will see if momentum intensifies downward. Speaking about CCJ, we have a strong bearish candle, another bearish candle on the daily frame. the 2-day will be closing tomorrow. So far, it doesn't look like a bullish candle will be done here. So before we move into the stock market, let's quickly check for bonds, how they closed. So it's closed 4.442 and yesterday's high or Friday's high was exactly 4.442. I think that this is a fairly significant failure, and we will see a bearish move tomorrow, and the move overall will continue down. So it means that TLT might see some strength also tomorrow. So this chart, this path remains intact so far on the 2-day frame. So now let's jump into the stock market, and let's talk about S&P 500. So today's candles for SPY, for QQQ, for GIA, and IWM were technically green and moved higher. However, I'd like to say that SPY and QQQ were bullish. Dow Jones wasn't exactly, because it needed a much higher price in order to reverse this potentially bearish formation. And the same for IWM, for Russell. In order to reverse the bearish combo, it needed a closure above Friday's high, so it didn't happen. So far we have disconnect between the major indices, and I would be very cautious for tomorrow. Speaking about the futures are technically in the same position, and interesting point that Nasdaq formed a freshly made 100 by 200 days moving average bearish cross. It was the last one among the 4 major indices. And for Dow Jones futures, this formation is potentially following 3 methods. Let's see how it develops tomorrow. So we discussed the monthly and weekly closures in our weekly digest. If you had a chance to watch it, well, you can get the perspective. So far, this has been our main chart, and we are tracking several potential paths here. So far, all of them remain on the table. The red one with an immediate move down, the purple one with an extended wave B, or the green one, potential impulse, or a leading diagonal for wave upward. So let's have a look at the green count from the 15-day or from the 15-minute chart perspective. So the only concern here is that wave 1 is technically it's a corrective wave, and I still don't have a very reasonable explanation for this one. So perhaps it is forming a leading diagonal, perhaps, but it's not confirmed yet. So assuming this wave 1 of a bigger impulse, then we would have wave 1, 2, and this would be wave 3 and 4 here. So this would be wave 1, 2, 3, and 4 for the wave 3. And the wave 5 would be somewhere here, 66, 6700. That's the perspective. Let's see, and I would expect another move down before, just to make it clear, before moving higher. So that's for S&P 500. So now let's have a look at the sector's closure today. So the sectors in general were bullish. However, I would like to see a stronger confirmation of this potential reversal. So far, this momentum is not sufficient, especially for the financial sectors, which failed to form a new higher, and still sitting within the range of this red candle. The same for industrial. Technology is in a better position, but we need to see a sequence. Consumer staples is somewhat neutral. Utility is bullish, and healthcare is also neutral. Consumer discretionary are very promising, and the chances for a move higher are significant. Energy, unfortunately, is bearish, and I think this is the only one very strong bearish closure here. So now let's talk about Nasdaq. So for Nasdaq, we have the chart that we've been tracking since April 22nd, and well, the chart looked like this. We identified the target, and right now Nasdaq is just sitting above the target. By the way, it made about 18% since our call. So far this wave could be wave 3. I would say maybe another higher high for completing the wave count. And but at this point, similarly to what we see for S&P 500, we are watching for 3 different counts. The green is bullish, and the purple and the red are bearish. Now let's have a look at the smaller frame. So this is the minor frame, that's minor wave of the 5-minute chart. What we are looking here is the potential impulse. So this could be wave 1, 2, 3, 4, 5, the first wave down. Then we might be having wave ABC. So let me change the color here and the degree. So this is wave ABC, and possibly I would be looking for another impulse down, something like this. So now we can, assuming this is the top, we can project some targets. So the next wave, if Nasdaq gets a reversal here, so we would be looking for this particular target for wave. This would be wave ABC of a bigger formation. So this would be ABC in our case, and we're looking for this wave ABC, and after that we would be recovering and rallying upward, making it towards a new all-time high and above. However, if this wave, if the wave impulsive wave extends down somewhat here, then there is a possibility of a bigger impulsive wave down, which would be 1, 2, 3, 4, and 5. However, it's a bit premature to discuss about it. Let's see how it closes in the next couple of days. So there is a chance for a move lower. So that's Nasdaq, and I'd like also to show you the Russell, something that we discussed about the short-term perspective for Russell. So Russell is slightly different, has a slightly different wave formation, so it has a clear impulse of the bottom, wave 2. This is potentially wave 3, and now I'm looking for a bigger flat for wave 4. So far it formed an A, which is likely an impulsive wave, wave B, and there is a chance of either an ending diagonal or a very shallow impulse towards this level, and this 1930.6045 is at a very strong level that must not be crossed in if Russell is expected to keep its impulsive structure. So that's for Russell. Now let's talk about the feature of the day, and I picked BlackRock. So this is our BlackRock chart, which we shared in February, saying that BlackRock has a very, very good chance to drop toward this level, 814. And this was the target area. So going forward, this is exactly what it did, and it even surpassed the targets. So it fell to 774, which was, by the way, a 28% of the top. And right now, I think that BlackRock is recovering. So technically, it formed a 10-day frame candle, which confirmed a bottom here. I think that we can remove this chart, remove these elements, and this is going to be our next chart. So now let's have a look at the monthly closure. This is an interesting one. BlackRock formed a bullish engulfing on the monthly frame. I think it's fairly rare candle, and I did some big testing trying to find a similar technical conditions with the candles, which were now bullish engulfing on the monthly frame. And I found an interesting 2 points. First of all, that this formation is very solid and it's backed statistically. I would say we have about 92% of probability for a bullish rally after this candle. Over 90%, which is huge. And I also run some statistical estimates for the rally itself, and I think that right now BlackRock will be facing a fairly significant move up, which will be adding about 40 to 50% to its cap, and it will happen in the next year and a half, maybe 2 years. So I think that this target is sitting between, based on some statistical runs, between September 2026 and December 2027. So 40 to 50%. That's the perspective for BlackRock. Might be shocking to some, but in general, I would say it is what it is. Statistics. Now, if you, by the way, if you are interested in our long and midterm perspectives that we discussed over the weekend and shared with our members on the website for the financial sector overall, and we dissected XLK ETF and projected its targets based on our historical charts, you're welcome to join our service and check what we offer right now. Now, speaking about the other components of financial sectors, I would say this is the monthly closure. I would say that Visa, MasterCard, Wells Fargo, Citi, Goldman Sachs, BlackRock, they closed with strong bullish candles, signaling a continued move higher. And Loews Corporation and Chubb Limited, they formed bullish candles, but they would require confirmation. So it's not very strong compared to the other ones. But in general, financial sector demonstrates significant health, technical health. So let's see how it reflects on everything else, on the entire market, and what kind of moves we are going to see in the near and distant future. So that could be a turning point. And I discussed this again in our long-term perspective for the financial sector. So now let's move on to the final discussion of today, and this is Bitcoin. There was a very interesting closure over the weekend. First of all, Bitcoin formed a bottoming pattern on the monthly frame. Technically, on the monthly, it is bullish. However, the interesting thing that right before the monthly closure, it formed bearish engulfing on the 10-day and 5-day frames, and on the weekly, right the next day after monthly closure, it formed a strong bearish engulfing on the weekly. How to interpret it? Well, at least the beginning of the months, we are going to see bearish moves, and if the momentum extends and expands into the larger frame, so at least like 10-day frame or 15-day frame, we'll get confirmation, then we would be looking for something much more serious. Speaking about the daily frame, I discussed this a couple of days ago, saying that there is a potential double top, and so far Bitcoin is moving lower. Now let's talk about the next chart. Which one I have? Oh, this one. So this is a bigger Elliott wave, and the call that I made on May 22nd, saying that there's a potential for bearish engulfing when Bitcoin was 111K. So far, it's been slowly moving down, and it's already lost over 5-6%. So this would be the most typical target between 82 and 93 for the retrace for this wave. So the wave looks complete. And now let's have a look at the 1-hour chart. This is how we left it on May 31st after our discussion. So what I'm seeing here is that this is potentially wave 3, wave 4, and we would be looking for another move down for wave 5 of 3, making a bigger impulse down. And this would be indeed dangerous, because after that we could see wave 4, and Bitcoin could form an even bigger impulse. So if this happens, then the coin is indeed in a big trouble. Well, that's the perspective for the coin, and we know that crypto market usually follows Bitcoin. So before we wrap, as of Friday's close, our SPY signal in the swing room was cash. The live room, run by master trader David, has delivered over 68% gains on unleveraged SPY trades since January 2023. If you are serious about trading and want to try the service, drop us a note at help@investingangles.com, and we'll gladly offer a sizable entry discount to committed traders. Now let's wrap it up. So volatility cooled, hinting at market calm, but the storm could return. The dollar dropped but showed classic divergences on key frames. Yields bounced, but without strong confirmation. Watch this closely. TLT followed inversely, naturally, and might be setting up for a test. Gold moved steadily toward our projected target, no surprises. GDX came close, just shy of the bullseye. Natural gas impressed with bullish closure and solid monthly signals. Oil's waves are too impulsive to comfort, possibly a bullish zigzag unfolding. Uranium, right on cue. Indices like SP500, Nasdaq, and Russell are likely still stretching their consolidations. We also ran a deep statistical dive into BlackRock and the finance sector, check the mid-long-term Elliott wave forecast posted yesterday on the site. These are must reads for anyone managing risks into Q3. And finally, Bitcoin. While the monthly frame flipped bullish, the weekly remains bearish. That immediate shift, suspicious. If this is the kind of insight you value, subscribe to our weekly digests for just the price of a cup of coffee. It's the best way to stay informed on the market terms that matter and support our independent research. Hit like, share this video across X, Reddit, Discord, and beyond. And don't forget to subscribe and ring the bell so you never miss a signal. This is Investing Angles, where we chart the turn before the crowd even blinks.